Hello, and welcome to the latest instalment of MFS's Conversations with Connor, where we break down the key property news stories and what they may mean for you. Before we dive into today's episode, I want to take a moment to share a quick disclaimer. MFS are a bridging loan and buy-to-let mortgage provider and are not financial advisors. The opinions and views expressed in this episode are personal to the host and guests and may not reflect the views of MFS. For more information on MFS, you can find us at www.mfsuk.com. Now, let's get started. The market and the wider economy appears to have turned a corner. We always aim to shine a light on how the industry is in a more solid position than many would expect. But now it seems that message is starting to hit home for buyers and investors. Let's look at the mainstream lending market to start with. At the beginning of May, the Bank of England revealed mortgage lending hit its highest level since 2021 in March, with nearly 40 billion being lent out to borrowers. Mortgage arrears are also down, according to UK Finance, with both the number of homeowner and buy-to-let mortgages in arrears declining quarterly in the first few months of the year. Overall, buyer activity is trending upwards, according to research from Benham and Reeves, which found that over the last year or so, all but 2 counties in England saw the number of buyers entering the market push upwards. These buyers are arguably entering at a pristine time too, with Moneyfacts finding that mortgage product choice hit a 17-year high in April, while average 2-year fixed mortgage rates plummeted to the lowest levels seen since the mini-budget. May was also an eventful month for development and construction. It's hard to get things built in the UK, which shouldn't come as a surprise, but the tide may be finally, if slowly, turning here. The ONS revealed that monthly construction output was estimated to have grown by 0.5% in March, with the main contributors to the monthly increase being private housing and infrastructure new work, which rose by 2.3% and 2.5% respectively. Perhaps the state's efforts to encourage development are yielding some initial results. The government claims its planning reforms will accelerate the delivery of new homes, roads and railways, and clean energy products that will boost the UK economy by billions of pounds. We'll have to wait and see if this proves to be the case, although new details on one regeneration project in particular makes me hopeful. York Central, one of the UK's largest city centre regeneration schemes, has just secured partnerships with major architects and other experts to help deliver thousands of new homes, offices, retail space, etc. This broadly will add major infrastructure improvements to one of the largest brownfield sites in England. The development will be situated next to York Station, and as it potentially adds over 1 billion in gross value to the city, perhaps it could be worth targeting for the right property investor. In fact, for those who are after opportunities in the current market, it is worth looking northwards. If we turn to the buy-to-let market, we can see that rents rose for the 4th month in a row across the UK in April, according to Goodlord. Meanwhile, average UK buy-to-let yields have hit a 14-year high of 7.11%. This is good news all round, but it's the north specifically that is experiencing a bit of a buy-to-let boom at the moment. Research from Magnate Assets found that the northeast is the top spot in the whole of England for buy-to-lets, as it's enjoying a 9.2% average rental yield. And this is followed by the northwest at 8.4%. In fact, Hamptons found that almost 4 in 10 buy-to-lets purchased during the first 4 months of this year were located in the Midlands or the North. Keeping an eye on how and where investors could progress over the coming months is crucial. The outlook for the remainder of 2025 is looking promising, even if purely just from an economic perspective. GDP grew by 0.7% in the first quarter, with the UK showing clear signs of momentum, according to the added commentary. The base rate was also cut to 4.25% at the most recent Bank of England vote, which should hopefully bring costs down across the board. And it may actually be relatively cheap to make a purchase right now. 20EA revealed that there were over 100,000 price reductions in April, a roughly 20% increase year on year. Also, the profile of the average investor behind some of these purchases is starting to become clearer. Looking ahead, the average property investor may be younger than expected, and they position themselves in a particularly structured way. Reportedly, the under 35s are driving property investment in the rental market specifically, and they're choosing that over home ownership for themselves in many cases. Also, a recent poll from Countrywide Surveying Services showed the first-time buyer sector is where property professionals are placing the most confidence for the remainder of the year. To make the most of the opportunities available to them, a lot of these property investors are progressing via limited companies, likely to save on tax and admin. The Q1 2025 Landlord Trends Report found that 66% of landlord-owned properties are now held in limited companies, up from 36% in 2020. A reminder, Market Financial Solutions can work with limited companies, LLPs, SPVs, and so much more. And as always, behind all of this is a thriving specialist lending market. The latest bridging trends data showed that even with an increasing demand for bridging loans, the average completion time decreased significantly by 7 days, from 39 in Q4 2024 to 32 in Q1 2025. There is plenty of opportunity to improve on this too, with a broker survey revealing that 72% of intermediaries predict growth in the bespoke market this year. We're ready for any increased demand that's coming our way here at Market Financial Solutions. With the Renters' Rights Bill and major development plans on the way, we know there's going to be an unprecedented need for flexible finance over the coming months. If you or your clients want to get ahead of it all, we're only a phone call away. Thank you very much for listening. I'll see you next month. And in the meantime, please feel free to reach out to us if you have any bridging or specialist buy-to-let questions. If you enjoyed this episode, don't forget to subscribe, like, and share. You can access our previous episodes in all the usual places, as well as on our website at www.mfsuk.com/podcast. See you next time.